Arihia Bennet. I debated whether I should say this because it's a bit of an age giveaway, but Arihia has been with Child, Youth and Family for 24 years and more recently became Chief Executive Officer of Te Runanga o Ngai Tahu. And so I think we'll hear more about that and her work with iwi. So welcome to the podium.
Au tūtahi o te rā kei te mihi ki a koutou, a ki tēnei wā kua hui mai nei, a ki tēnei rā no reira e tēnā koutou. I ngā rangatira mā o ngā hauewha me nau mai haere mai a ki tēnei kaupapa whakahirehira. Ko tēnei te wiki o te reo Māori. So it's with pleasure that I introduce myself. This week is Māori Language Week. And I was delighted to be a part of the audience this morning when we talked about the importance and the significance of community collaboration and partnering, and it's something that I'm going to step through very quickly in my 10 minutes as I talk a little bit about the history of Ngai Tahu and in particular its governance as we look back, we look at currently and we look forward. I'm going to cover four key areas. I'm going to look at the governance dimension itself, the vision of the tribe. I'm going to look at the notion or the element of and the importance of constant review and ongoing improvement and some of the challenges that we are faced with and again the significance of partnering. So bear with me as I step through some notes and I'll be delighted to take some questions later. An organisation like an iwi must think long term. And whatever we do, we're always considering both the present generation and the generations to come. And this is beautifully illustrated by the Ngai Tahu whakatauki, or our proverb, mō tātou a mō ka uri a muri a ki nei, which simply translates into everything that we do is not about today, it's for us and our children after us. So when I heard the kōrero this morning around the role that governance plays at the moment, certainly we look at the context and what we have to bring back to the community, but for Te Runanga o Ngai Tahu, in setting this proverb, it's actually about what we're looking forward to in the future. Ngai Tahu itself, if you're not familiar with Ngai Tahu, we have a membership of 51,000, just under the 51,000, 25,000 living in the South Island, 21,000 in the North Island, and you can do the math for the rest around the country, but around the world, but predominantly in Perth, Sydney and Queensland, as well as other countries across the world. We have a takiwā, or a tribal area, of 140,000 square kilometres, so it is a larger part of Te Waipounamu or the South Island, and our governance covers from Kaikoura right through to Murihiku in the Invercargill area. So we have a governance of 18 governors that lead the tribe. Being able to govern ourselves in a stable, authentic Ngai Tahu way is one of our strengths. Our governance structure must be robust for the long term, productive for each generation, vibrant and sustainable. And of course, this doesn't mean we haven't made mistakes, but hopefully during this period, we think we're quite young, 16 years since settlement, that as we test things out, that we're going to learn from those and actually build and make a better future rather than make mistakes. So I'm going to talk a little bit about some of the challenges that we've faced in governance over these years. From the 1996 legislation, Te Runanga itself was established through a piece of legislation, so we just didn't grow up overnight. We had, prior to 1996, we have Ngai Tahu membership that is in the takiwā of South Island. And in 1998, we settled with the Crown. You can imagine from 1996, 1998, that all of a sudden, as we formed a governance collective of 18 leading governors across the tribe, that our community members were catapulted into really important governance positions. So it became important for us to actually look at how we develop that structure and on top of that, how we continue to build that capability. So the past 16 years, Te Runanga has made constant improvements to its governance structure. In more recent years, we've had two significant review occasions, one which has affected the delivery side of our organisation and the other that has affected the commercial governance side. Both of these reviews arose because we felt we could do better. Our organisational structure is complex and it has several separate functions, mainly in the commercial sector and the primary industry area. At different times, there have been tensions between these functions, and the test will always be how we manage these tensions and keep the communication flowing so that we can continue to paddle the waka together. At times in our development, the waka paddling hasn't been in unison. To give you an example, the kawanata, or the charter, which is the Ngai Tahu document that continues to guide us in our governance, there is a part of the kawanata that asks us to keep the wealth generation side of our organisation separate from the distribution functions. However, at one stage in our development, this division was so great that a number of our governors were concerned about the levels of accountability that were missing or were being ignored. This led to some well-publicised divisions within the iwi. The performance of our commercial entity was being questioned, and the lines of accountability were all were not well understood or weren't being implemented. And some of you will recall through media, or if you've been engaged with Ngai Tahu, that was a difficult time during our development. And for myself, I have been recycled, or I was chairing the Ngai Tahu Development Corporation from 1999 through to 2005, and the disestablishment of the Ngai Tahu Development Corporation really led a pathway to actually try and merge and begin enable us to look at how that governance was going to look like going forward. So what did we do? We reshaped the governance. We asked the representatives to step up to their responsibilities as trustees. This led to a greater clarification of roles and functions, and a directive that would practice a notion known as kotahitanga, or unity or solidarity. Now, you can give a direction to say you're going to practice unity or solidarity, but actually it's in the behaviours and the actions, and underpinning that it's actually the attitude of those who are in our governance and who are staff participating to enable this to work. So giving a directive's one thing, but actually if you haven't got your feet on the ground and you haven't got the relationships happening, it wasn't going to be a happening thing. By 2009, we were putting in place other technical aspects, such as a clear investment policy framework with benchmarking, and a clear distribution rule, reinstating subsidiary boards and replacing several of the directors of our holdings boards. It was a pretty difficult time, but having come out on the other side, we now have leading industry and development people heading up our Ngai Tahu Property Board, leading figures in the tourism industry on our boards, and so on. We also looked at creating an analytical and an assessment capacity at quite a high level that sat in the Holdings Corporation to pursue appropriate investment going forward. So it wasn't just what was hot, it was actually having that robust rigour matrix and the analysis that sat behind us to actually look at what wasn't only local, but what was actually leading more towards global development. So we installed those processes. The Ngai Tahu Holdings Corporation, our parent wealth-making company, now has four main functions that are clearly understood. Monitoring aspect, setting the strategy across the pillars of the commercial sector, portfolio management and risk management. These are all aspects that you'll be aware of in your own councils. Within the Holdings Corporation, our primary industries that we focus on at the moment have been in the nature and are currently undertaking in tourism and property itself, Ngai Tahu property. We're just branching out into a rural property division, and we also have seafood, Ngai Tahu seafood, as well as looking at equities and investments. So it's important that we develop some rigour in terms of monitoring that sits in behind this. So this careful structuring of our businesses has given us greater capacity to be externally focused and ready for new opportunities. While the financial results speak for themselves, there is a much stronger sense of ownership and engagement. There are clearly defined guidelines that detail when our companies need to come back to the governors to seek decisions or direction. In this way, our people can have a say, and they can also be clear about that we are all aligned in terms of that proverb I spoke to you about before, that we are on the pathway of seeking that sense of self-actualisation. On the delivery side of our organisation, we implemented a governance change in 2011, creating 2 senior governance committees, one with the responsibility for internal of domestic matters, and the other taking charge of external policy and strategy. This has allowed our directors to be more deeply engaged with tribal development according to their interests. Each committee works with management to reform and update program policy, inject energy into distribution programs and funds, and refocus our efforts on cultural revitalisation, education and papatapu runanga and development. And I just want to sort of labour over this point a bit, because we can have we have a successful wealth creation entity in terms of the pathway that we've taken. But what's the point of having that if we are not able to develop our own people? What's the point of creating a Wigram if Ngai Tahu whānau aren't even in Wigram in terms of property development? We have an important role at being participating in the community, but the distribution side means that we also have to look at carefully how, whilst we enable both of those two sides to operate separately, we've got to actually have some synergy so that one is working for the other and vice versa. Another example is we are a group of whānau that is over the 50,000. Less than 1% of our whānau are fluent speakers of te reo Māori. So it's important for us to be looking at not only education strategies, capability strategies. It's important for us to look at how we revive our own culture and identity. That's actually what makes us different from you, that no one else can do that but Ngai Tahu. So it's important that our distribution takes a serious look at actually how we bring about those changes. It's fair to say Ngai Tahu has a great reputation of getting on with business. The committee structure that we've developed helps us to focus on what our people want so that we improve and we enable families to better themselves. It's not us doing it at them, it's us working alongside families so that they can determine what they want to be and where they want to head to in terms of their own families and their own communities. Right, so what are the challenges ahead for us? Well, measurement is one of those, and we're in this day and age of looking at not actually what we put in, but also what we're going to get out of it. So measuring the success is important. So how do you measure cultural success or cultural failure? What about tribal well-being? So we've looked at an outcomes framework as a tool to develop some disciplines to record both achievements and failures, and then report on them to our membership. But the measuring of the success or failure, particularly for a values-based organisation, is pretty tricky. How do you show that levels of well-being have been enhanced, that culture has appropriately been protected and nurtured? There are a number of academic methods out there. So we looked to those academic methods, and we also looked to the uniqueness of our own culture or our own iwi, and we looked to actually fuse those cultural outcomes with those academic methods so that we can get a check on where we're heading to with whānau. And what better way to actually establish outcomes than for whānau to actually participate, whānau communities and marae to participate and set those outcomes. It's no use a group of people sitting in a back room and actually deciding those outcomes when it's actually whānau that will say to us whether the achievements of Te Runanga or Ngai Tahu have actually influenced any change, have made their lives better, or made some different so that there is a positive outcome. So that's an important part that we're challenged with at the moment in terms of measuring success as we move forward. The other challenge that we have is being a tribe that's grown up from 1998 settlement, is the development of governance capability. We want our people to have the best that we can, so it means actually having governance who actually know what they're doing, who are engaged at the flax roots with the communities, but also have a great sense of actually knowing what to do when it comes to governing. It's important for us to actually acknowledge that there are specific generic competencies, such as those that we all ascribe to under IOD standards, competencies, etc. But it's also important for us to include the nuances of what tribal leadership means, what tribal communities are. And that means looking at what actions and behaviours and connections and relationships and significantly the cultural practices that exist in the community and fusing those together. And we've been delighted in this last month to actually begin a governance development training course with Waikato Tainui. Waikato Tainui Governance have been leading a governance development program in their own area, and we were invited to join this development this year. So we've just been through a governance training, a joint governance training with Waikato Tainui governors, for our experienced governors, for our emerging governors, and we're also thinking about it for our rangatahi in terms of setting the scene as to when they move into these positions of governors going ahead. Look, lastly, I just want to focus, have a word on partnering. I started talking about partnering and collaborating. Iwi can't do it all alone. Iwi are part of the fabric of Aotearoa, New Zealand society, and as iwi move through their phases of settlement, they too want the same aspirations that other New Zealanders want. They too are interested in preservation, protection and innovation of our communities. So it's important that we actually get together, we have those conversations and we get some stuff happening. I'm delighted to be able to report in the rohi, or the area of Te Waipounamu, that Te Runanga o Ngai Tahu has started on some of these collaborations, both with local government councils, with the government in terms of being a statutory partner with the Canterbury Earthquake Recovery Authority, and also, I'm getting the signal there, and also with ECAN in terms of co-governance. So for us it's happening, we just want to see more of it happening. So kia ora.
Thank you, Arihia. The next presentation is from Craig Stobo. And amongst his many engagements, I just need to remind ourselves he's worked as a diplomat, an economist, and investment banker. And he's also currently the independent chair, a director and chair of the local government funding agency. Craig.
Kia ora and good afternoon, everyone. Thank you very much for inviting me to LGNZ 2014. There are many more grey hairs out there in the audience than I've got in my dome, so I won't presume to understand what your issues are with governance and financial performance, because they'll all be different. And Arihia has just spoken about her experience, so I'd like to give you two case studies about my own experience, and you can pull those apart in question time and we can have a discussion about what governance means for you. But perhaps to help everyone, I'd probably like to put out a definition so we know basically what we're trying to talk about here. This applies to an ASX Governance Council definition. It's the framework of rules, relationships, systems and processes within and by which authority is exercised and controlled in corporations or councils or organisations. It encompasses the mechanisms by which organisations and those in control are held to account. Corporate governance influences how the objectives of the organisation are set and achieved, how risk is monitored and assessed, and how performance is optimised. Effective corporate governance structures encourage companies, organisations, not-for-profit organisations to create value through entrepreneurialism, innovation, development and exploration, and provide accountability and control systems commensurate with the risks involved. And they'll all be different for everybody, and everyone's different organisation. So let's just talk about a couple that I'm involved with. The first one is AIG, which you might more familiarly know as the sponsor of the All Blacks here in New Zealand, but also the Maori All Blacks, the Black Ferns, the Sevens, etc. They've been operating for 90 years around the world. They're listed on the New York Stock Exchange. They've been here in New Zealand for over 40 years, 60,000 employees worldwide, 100 in New Zealand, over 88 million clients. So this is a massive, the largest insurance organisation in the world, rated A by S&P here in New Zealand. And their conundrum here in New Zealand when they asked me to become a director was that we're being forced to change by regulation. So the first example is one where a company had to react to government edict, and that is new rules around insurance. The second example will be one where local authorities took control and drove an outcome for themselves before something else happened to them. So it's a different sort of case study. So the RBNZ became the entity responsible for administering the Insurance Act 2010 to promote the maintenance of a sound and efficient insurance sector and to promote public confidence in the insurance sector. So they brought in a licensing regime which was introduced on the back of the prudential requirements of the Act. So AIG had to move, and the key considerations for them were that the Act required several things. One was a recognition of home versus host regulatory issues. So AIG is supervised by the Federal Reserve of New York as well as the RBNZ. So what sort of information systems did RBNZ need to know about the operations and capital support for AIG in New Zealand? It had to put in place fit and proper certificates for new directors on the board because the rules required an equivalent number, or at least an equivalent number, of independent professional directors who met a fit and proper test, which the RBNZ will scrutinise. And of course, most importantly from my perspective is the new Act required those organisations who were to become licensed to meet certain solvency standards. And because the independent directors are effectively a whistleblower to the RBNZ, the most important thing that we're focused on is making sure that we've got the capital to be able to meet claims of our clients. So it's huge scrutiny by the new 3 independent directors. So the responses from an imposition of regulation on governance was the creation of a new board, which commenced being built from 2012, the evolution of existing audit, these are separate committees, audit, risk, remuneration and nomination committees. I've talked about the increased involvement and interest in solvency. And of course through this latter process from the outcome of the Christchurch earthquakes was making sure we could meet our claims efficiently from clients who had insurance policies with AIG in Christchurch, and about 90% of those claims have been met to date by number. And the other piece that we wanted to focus on was this is an enormous global organisation. How can we bring innovation back to New Zealand? So we launched a cyber edge product to take into account internet security issues for clients. So here's an example of where we can use some of the global expertise of a global insurer and bring those ideas to New Zealand. So the governance there wasn't so much about starting from scratch or creating something new, it was an evolution imposed on us by regulation. But in your governance thinking around organisational change, you have to give some thought as to future regulation and what that might mean for change at a governance level. The second example is LGFA, which many of you will be familiar with. That was a concept 4 years ago. During the global financial crisis, many of your banking counterparties found it very difficult to raise finance offshore, and therefore the cost of funds and access to funds became a problem for councils, despite the fact that their businesses hadn't changed and their credit ratings were pretty solid. So why were they relying on this increasingly weak bank sector faced by the GFC excesses? So a group of Type 9 prospective shareholders got together, Type 9 councils we called them, and the ministers at the time challenged them. We don't think you can fight your way out of a wet paper bag on this one. Good luck. Well, the Type 9 did fight their way out of a wet paper bag, got together and sat down with the Crown and negotiated the beginnings of an entity. And through May 2011 to December 2011, an establishment board was created. It nailed the enabling legislation to get the organisation off the ground. It got cross-party support. It got a shareholder council up and running to monitor a prospective board. It put in place foundation policies, a new board of directors, board policies. A CEO was searched and found and appointed, and then the website, premises, staff, business plans were up and running, followed by the publication and agreement on a statement of intent. And so we're up and running on the 6th of December 2011 with our first tender in February 2012. So now we've got 44 approved borrowers, over 30 shareholders, including the Crown, who are a substantial partner, not a guarantor, but a substantial and important partner. We've raised over $3.7 billion in finance, which we've on-lent to councils at cheaper interest rates and hopefully longer maturity terms than you could have got before. We've also produced results that are ahead of business plans. We had a very conservative business plan to start with, and we had tremendous support from councils who saw the benefits of working together to create something that was of benefit to all of them. Interestingly enough for you to understand that this entity has met with widespread support from offshore investors. Something that's important is connectivity between global capital markets, which wasn't available to you before, is now being available to you now through this conduit, the LGFA. So around 18% of our register of bond securities are held by offshore investors. These are sovereign wealth funds, global pension plans, private banks, normal commercial banks, mutual funds, and mums and dads. And why are they buying LGFA? It's a great story on New Zealand. The local councils are a great credit risk. They're inherently conservative in their approach to finance. They're backed by property. There's a great macro story in terms of New Zealand's growth story and the strength of the currency and our growth prospects with Asia. And we have a great interest rate to offer them. 5% appears very attractive to mum and dad in Japan. And so the mutual fund industry in Japan is thinking about creating more New Zealand dollar funds, including LGFA, which ultimately helps fund the activities in your regions. So you're globally connected through us. What's worked for LGFA is the importance of the majority of independent directors, in my view. There's a diversity of skills, diversity of geography. In my view, they're highly skilled contributors. And it's hard for me to say this, but I will. There are no politicians. There are no politicians on that board, and I think there's an agreement in the foundation policy level that there won't be any politicians on that board, or at least for 5 years after a politician is retired. All conflicts of interest are declared. There's a conservative business plan that I mentioned. Outstanding CEO who unfortunately is retired, but fortunately we've got another outstanding CEO in prospect, Mark Butcher, currently Treasurer at Auckland Council, who's coming to work for us beginning of August. The role of the Shareholders Council, which is made up of 10 local councils, they sit in between the board and the majority and the remaining shareholders to help provide guidance and accountability from the board members. And there's an absolutely constructive relationship with the Crown, and that's one of the themes running through your conference. The Crown is a shareholder and provider of outsourced services to us. And amongst the board, there's an absolute belief in the ability of councils to work together, and we would like to find out more ways of meeting your needs. I guess that what sort of means at a personal level is you need to understand your role as a director. I used to be a CEO. I have found it very hard not to get involved in the detail. You've got to pull back and say, it's not my role. My role is direction. Direction. Execution is management. So you need to trust management but verify. Very important. Trust but verify. Give them the rope, let them go, and just ask for results, please, and regular reporting. So to sort of summarise what success is like with those two examples, Warren Buffett would say that success, success will come if you just focus on two things. One is capital expenditure, don't let that run away, and secondly, the CEO's remuneration. It's not a bad way of looking at what success would look like. A second way of looking at it would be a little bit like beauty. It is in the eye of the beholder. Success is different things to different people, and it will mean different things to different people in this room. Or perhaps we might just leave it to Darwinian observations on evolution. Perhaps successful survival is the ability to adapt to change. So in some senses, the couple of case studies are probably still work in progress, but they're surviving and thriving. So maybe the answer is, can we build organisations that are resilient and can adapt to change? That arguably might be, under Darwinian observation, what success looks like. Thank you.
The final presenter of the three is Andrew McKenzie. Andrew is the Chief Financial Officer at Auckland Council. In this role, Andrew's responsibilities include all Council's financial functions, encompassing citywide financial policy, overall expenditure and income monitoring, analysis and reporting, debt investment management, business planning and budget processes, annual plan and annual plan reports, long-term financial strategy and funding policy, procurement, valuation and rating issues, and CCO monitoring. And that's half of what they've written down for me to declare this man's capabilities. I'm sure he's outstanding and I welcome him.
What you didn't mention is that the New Zealand Herald keeps referring to Len as our city treasurer, so I don't have that responsibility, which is why Mark can go and work for Craig. Thanks very much. Good afternoon, everybody. I wanted to talk to you today about financial governance and performance, and really within the experience that we've had within Auckland Council over the last 3.5 years. The opportunity and I guess the requirement with amalgamation to set up something from almost scratch. I say almost because there are a lot of behaviours and attitudes that were brought together as the councillors and staff came together. So I want to talk a little bit about the relationship processes, the information and those behaviours and attitudes, and what we have done to put in place a framework which we've tested globally. We have to borrow from offshore. There simply isn't enough money in New Zealand to fund all of local government, including something our size. And so we've tested it with overseas investors and seen how comfortable they are with what we do. So the context when we came together, it meant that we needed a lot of thought. We had a very multi-headed political governance framework that was very new. We had a group structure, which was again very different, significant CCOs operating with their own independent boards, etc., at arm's length from us. We had 8 of everything. So all the basic stuff that you have, there were 8 things that we had to go to source information from. We also had a financial size that meant, as I said, that New Zealand wasn't going to be enough in terms of our own funding. We'd have to go offshore. We had a level of scrutiny on us, as well as the normal scrutiny that councils get, the fishbowls that we work within. Because we were this new beast, this brave experiment, there was a lot of scrutiny. We had requirements for the Office of the Auditor General to report on us as part of our setup and moving through in terms of the way we do business. And finally, there was that disparity in culture and approach. For some councils, the level of scrutiny, the New Zealand Herald used to focus only or primarily on Auckland City Council. It now is focusing on all of the region. The sheer size of 8,000 people, $3 billion in budget, and how you deal with that, and what you're comfortable as a person dealing with and delegating to other people the authority to do on your behalf. And finally, the disparity in people and just what people felt was appropriate in terms of, again, that delegation or the way in which they work with other people. So that was kind of the context we came into. So we set up a number of objectives, the leadership team around the financial area. We had a whole lot of do's. We wanted to give people assurance. We wanted them to not go to bed worried about what was happening. We wanted to make sure we had appropriate levels of financial control in place. We wanted something that gave people comfort that we were in a financially sustainable position. We also wanted to help decision makers. We wanted to try and make sure that when we spent money, it was aligned with the things that the councillors had signalled to us that as a region they valued and they wanted to improve our performance in. We wanted the organisation itself to know how well it was doing. If we went out and asked managers, are you any good at your job, doing what you do you deliver value for money, they'd all go back yes, and then you'd say, well, can you prove that? And they would struggle, they couldn't do that. So we wanted to set up an environment where that was promoted and part of the way we did business. We wanted to make sure that we're easy to do business with. There's a lot of people who interact with council. We have about 8,000 staff we pay on a regular fortnightly basis. We also have 12,500 suppliers who are incredibly important to us in making sure the city gets things done on a daily basis. We had to make sure that it was easy for them to do business with us, that we paid them on time and regularly. And finally, we wanted to make sure that our reputation and credibility weren't lost, that there wasn't things that came up that were kind of like really simple, that's really dumb that you didn't have that right. So we had to focus a lot on the basics as well. There were some don'ts. We didn't want to overload or confuse people. We didn't want to create an industry around things like reporting. And we didn't want to have duplication across the organisation. So there are a few key elements that, particularly as we've talked to people who are external to New Zealand, they look at the country, they've signalled to us they think are outstanding features of local government, not just of Auckland Council, but of local government. The first thing that we did was introduce reporting frameworks. So we made sure that we reported regularly. We started off every month, the councillors would get a report on what was happening across the council. We made it as transparent as possible, and we tried to make it performance focused. We didn't just give people numbers, we talked about what we'd done, what had happened. You can tell people this is how much I've spent on a capital project, but did you actually deliver what you were meant to deliver with it? We had a struggle, I will admit. We had 21 local boards that we had to report to, and I'm sure any of the local board members will know that getting information at that level was very, very difficult for us to do. We had to become a lot more people-focused there, getting senior staff to go along and could talk through performance because the information wasn't necessarily to hand. Really importantly, we established some really basic financial principles and parameters to work to. That helped us with funding, it helped us with our planning, and it helped us with our delegations. These are the rules that we're going to work to. We set up a concept of executive governance. So if you worked as a leader within council, it didn't matter what tier you were at, you actually had to take responsibility for the whole organisation's performance and be aware of it. You're an executive governor. Your role wasn't to just do your job in your area and say that's success. We looked at how we evaluated projects, and we joined up with central government in their Better Business Case standards because we thought it was important, particularly with the level of involvement we were having with central government, that we were aligned with them and they were able to see that the work we were doing met the standards they were setting. We went out and we spent a lot of time with the financial markets, telling them what we're doing. Every month we send out to all the major trading banks a piece of work which shows them what we are looking to borrow into the future and how much we're expecting to pay in interest rates. We're the only entity that does it in New Zealand. It's a fantastic tool for us. It's one of the reasons Mark is going off to work at another place, get a promotion, is because now we have people come to us with deals. Our credit rating is incredibly important for people who are lending us money. We spent a lot of time working on that, making sure that they were aware of what we were doing and why, and there's an investor page on our website. Our auditor relationship was a really important one. We've had fantastic support from Audit New Zealand and the Office of the Auditor General. They've been very strong partners for us, and that was the approach we took. Rather than see them as someone who was going to check up on us, we said, well, let's embrace them. We'll learn from them as much as we'll get wrapped over the knuckles if we don't get it right. Measuring value for money performance has been very important for us. Where, as I said, if you said to somebody, are you any good at your job, they'll say, yes, prove it. So we put in place frameworks for how we improve performance. We've had some stunning results. It used to cost us $10.68 to process an invoice within council. It now costs us $3.12. And we've achieved that by literally just turning around measuring performance and charging those people who do that work with the task of getting us from $10 down to under the $4.50, which was our benchmark. And finally, I just wanted to touch a bit on our subsidiaries. You know, we have this big CCO structure that sits around it, and it does have a lot of our business out there, and we've had to think very hard about how we manage that relationship with them. It's a really easy place to duplicate. So they do a report, So then I have a group of staff who go off and check it and do the numbers again. What value have we added? So what we've had to do is effectively make a decision between trusting and checking. And we've chosen to use the trust one. They'll give us numbers, we're assuming they were right, they'll get caught out by the auditors at the 6-monthly or annual review points anyway. So the relationship one becomes one where we've appointed these directors, they're reporting to us on how well they've done, rather than a group of council staff telling us whether or not they think they've done a good job in setting up a conflict environment. Now, we can get away with that because we are funding these people. It's not that they're off there funding themselves. So this is a slightly different relationship from some of the CCOs that you will have in place. But it's been incredibly important for us in stopping a lot of the transactional cost and churn you get around people butting heads, because we've decided to trust them. So how have we done? I guess, and this is something, a message for the whole sector, internationally, anybody who looks at the way in which local government works around the world, they look at us with envy. If you talk to the credit rating agencies, they'll describe New Zealand's institutional arrangement, i.e. the legislation, is the strongest in the world, and certainly the way in which the financial management works within Auckland, they've described that as the strongest nationally in terms of that environment we create. So I think it's something that internationally the people look at us and they're envious of how we operate. Our rating structure, the prudent financial management legislative basis we have for operations, it all works incredibly well. Thank you.